I'm doing a really quick one. I'm inviting everybody on Twitter as well. I just figured I would do a public one. So let's give people a few minutes to join, and then we'll jump in. I don't have a lot of time, so we're going to be pretty quick. Um, I got an audio loop. Uh, Jenny's home, but the kids are up and they're having dinner and stuff, so she doesn't have that much time with them eating. So once they're done eating, I gotta get them up for the bath and whatnot. So we'll only have a few minutes, but um, I wanted to go through a couple things just to bring people up to speed. I haven't done a public stream in a while, so all right, we'll give it like another 1 or 2 minutes for more people to join, and then we'll jump right in. Oh, sorry about that. The dogs peed. Had to clean that up. Okay. No, I'm not going over link. So if you just joined, I don't have a lot of time. Kids are eating now. Jenny's going to need me once they're done for bath time, so I only have a few minutes. I'm doing a quick public stream now, quick 5, maybe 10 minutes. Bring you guys up to speed because I haven't done a public stream in a while. And then I'll just do my normal live stream, my longer live stream later tonight, where we'll just be with the premium group. But for public people, you have no idea all the streams we've been doing, what I've gone over, so you'll be able to see like my new trades that I got into last night in the live stream are doing very well. Obviously, like XTZ, for instance, another one of my really surgical entries right at the bottom, pretty extremely precise there. So I will show you guys where my new trades stand, because these are some pretty sick precision trades, which is the whole thing with my model. As you noticed, I tweeted before and I said, for those who aren't familiar with my strategy and my model, my whole technique is built around the premise that I'll get into these trades where I may risk 1%, 2%, sometimes 2.5. In this case, I had a 1.7% risk profile. My stop loss was 1.7% below my entry. So I entered right on each of my dynamic support, one of my key support zones, and we broke out for almost 13% pretty much. I sold a portion of my position for over 12% profit, and I'm holding the rest of it for now. So there should still be some more upward momentum, possibly, if BTC holds. I mostly wanted to show you guys really quick what my recent trades are and where BTC currently stands, because BTC is going to be the bellwether here. It's going to tell us what's going to happen with everything. So let me show you that first and foremost. So with BTC, I got into this trade last night, really big one, 10x margin. I actually moved up my stop loss, so this trade is risk-free now. If we were to dump and hit my original entry, we're probably going to dump a lot further than that. So I'm safe moving my stop loss up to my entry. So now my pretty large, I have a large 5-figure sum invested in BTC in this short-term trade with 10x margin multiplier. So I could potentially make a substantial sum if we get some more upward action here and kind of build upon this bullish momentum. Now, my stochastic oscillator is one of my most important tools. When it's locked in, it's not always locked in. People in the group are very familiar with this, so not to beat a dead horse, but for people who are from the public side of things, I talk about this a lot. With my Stoch oscillator, it's one of my key strategies that allows me to identify those ideal entries when we're right ready for a reversal. If you noticed earlier, I mentioned on Twitter how I circled right here, and I said, see how we're sitting right on top of that 55 EMA? I said the 55 EMA and the top of the cloud right here, that's going to serve as the major support confluence zone, because that's 2 out of my 5, each of my dynamic supports. So that was a really strong confluence zone. I said, we're going to bounce right there. Sure enough, we did. Exactly. So my model's on point. That means when I'm looking at a chart and I can see everything that I use, all of my styles, techniques, models, and indicators, oscillators, when everything is doing exactly what I expect it to do, well, then I expect it to hold up. I expect the next several steps to follow that trend of being that accurate. If I was looking at this chart and my model was all over the place and none of my normal supports were holding and none of my normal tricks with the oscillators were working, then I would say, all right, I don't have a high level of confidence here. In this context, I had a very high level of confidence that it would bounce because we had such a clear picture where every time in the last 7 or 8 candles that it worked with, tested any of my dynamic supports, it held perfectly. 55 EMA, then the 99, then the top of the cloud. So we got the bounce, which was good, but we weren't getting enough upward action. We had 1, 2, 3, 4 candles in a row that just sort of sat there. And then I tweeted out and I said, if we don't get over this hump, we're going to lose the bullish momentum and come back down. So that's what I was afraid of. But we started pushing up again, which is nice. Exactly when I thought we would. Everything so far is looking good. The caveat being that if we do lose momentum, you can see with my stochastic oscillator, the way it works is we kind of maxed out here, then we got rejected and corrected. So that rejection happened right when the Stoch reversed here, and then it went down, and right as the Stoch reversed and started going back up was right after we bottomed out. So that was the start of that wave up, was this Stoch wave from here to here was the bottom to the top. So then we maxed out here, and we started turning south again. So if we turn south here and we start coming back down, we're probably going to keep correcting, and I'm going to lose, well, I'm not going to lose anything on the trade because my stop loss is set right at my entry. So worst case scenario, I'm going to break even. I can't lose a penny. That's why I always talk about risk management. risk management is absolutely crucial. So my stop loss is right at my entry on BTC, so I can't take a loss no matter what. But I will give back a bit of profit. I'm sitting on a decent profit now with 10x leverage, so I'll give back that profit if we do dump. But we still have the momentum on our side. It's just not as strong as it was before. So at this point, the Stoke is looking like it's starting to turn down, but we still have an hour and a half left in this candle. If this candle stays at roughly 11,750 or higher, so if it doesn't go below like 11,750, maybe even 11,760, let's just call it 11,760, right around there. So that key momentum indicator tells me that as long as we stay at or above that level, then we're not losing all that momentum and we're not going to see a reversal. If we close this candle, if we end up closing out this 4-hour candle below that key momentum indicator, there's a pretty good chance that this is going to continue into a bearish reversal. And once the Stoke starts turning down, you're going to see the price start turning down. It doesn't always mean it's going to be a huge dump. If you look here, so the Stoke was really high here, and then it came down, right? And you could see it coming down like this. Then it got an early reversal back up, but it still came down. So even though it doesn't have to go from top to the bottom constantly, sometimes you get a big wave up, a tiny wave down, a tiny wave up, a big wave down. But when that's happening, every time you're getting a reversal up and down on the Stoke, 98% of the time, you're getting a reversal on the price. You just can't tell how big it's going to be. In this case, this reversal, right, started turning down right at the top. That was a huge dump, right? And then it reversed back up. This was a pretty nice size pump back up. And then the drop down next was pretty much the same as the move up. And then this move up, that wave on the Stoke, perfectly lines up with this move on the price, which is much bigger than the prior one. And then the drop was pretty small. So I'm not going to say for sure that it's going to dump particularly far. I can get into that in more detail in a later video, how I do know that. But just purely on keeping our momentum, it's going to be key to stay above, maybe not that high, but pretty close. Where we are now is probably a little low. So I would say right around 11,760 on this OKEX chart. All the charts are obviously different, but that's a pretty key zone. If we can stay close to that level or at or above that level. If we're where we are now at like 11,745, 11,750, it's probably still doable. But what happens is once we close this candle, if we close this candle with the Stoke crossed over where the two lines cross, then there's a very high probability it's going to continue trending downwards. It's very rare for it to cross over. So if you go back to like right here, see how they almost crossed? The blue almost crossed over the orange, but it didn't. At the last minute, it turned back up. So they were together, it turned back up, and we continued the uptrend. When it does finally cross over, it's usually always going to continue that way on the way down. So you can see, not in a big bull run like that, but over here, we're not really seeing that happen at all here on the 4-hour. So that's what I'm expecting. As long as we can stay reasonably close to where we are for the next hour and a half, and this candle can close, we have a chance to remain bullish. But we are still going to be correcting soon. But if we can get 3 or 4 more, we could possibly get maybe 2 or 3 more bullish candles out of the 4-hour before we get a 4-hour correction. Then the test is going to be if we correct back down below 11,550 or so. Hopefully we don't come down further than that. But in theory, this run can remain bullish as long as the upcoming correction, which is going to happen, it's going to be within the next 3-4 hour candles, we're going to have a correction. It may just be a 2% or 3 or 4% dip at the most. It's not necessarily going to be a huge drop. So there's still a chance once we do correct that it will stay above the start of this move up. It'll stay above like 11.4, 11.5, in which case we can remain bullish. But my short-term trades on that correction may take a hit. That's why, just to eliminate risk and to make sure I'm protected, I'm moving up my stop losses to eliminate risk. So if I do get stopped out, worst case scenario is I break even. I can't possibly take a loss. So that's my thinking on BTC. I'm going to watch what happens over the next hour and a half. And then if we start coming back down, it looks like it's not going to hold. Then it'll be a good thing I moved up my stop loss to my entry, because then I'll be risk-free. If we were to close this 4-hour candle below 11,750, again, I'm looking at this OKEX Bitcoin Tether pairing. Another exchanges pairing, another chart may look slightly different. But based on this chart, I may, if we do get back down to below 11,750, I might even sell half of my Bitcoin position, because again, that would only be, I'd only be up like 1.25%, but I'm also trading with a 10x margin, so that would essentially be a 12%, 12.5% profit on a pretty large trade. So I'll still make some good gains on that. So I have, just to show you my other open trades, and then I will let you guys go. Obviously, people in the group will do a stream. Premium members will do a stream later. But just to show the public what trades we went over last night, these are all the trades we entered in my live stream last night, me and the group. We went through the following analyses. So I had my Ethereum entry, again, pretty damn surgical. Now, we were sitting right here. Everybody in the group from the stream last night can tell you it was pretty cool. We were sitting right here, and I said I actually want to get in a little bit lower, so I set my entry right here, and sure enough, that dip hit it perfectly. And I based that on what we were seeing with a 15-minute even. I was able to predict that little slight retrace because we were coming down on the Stoke, and I knew that we had to come down and reset before we can turn up. So we got down just enough to get filled in these 3 candles. My pretty big entry on ETH got filled, so that worked out perfectly. I'm going to move my stop loss up to my entry on Ethereum too as soon as the stream is over. I'm currently sitting at 3.5% profit, which is pretty nice. Just to add this to the chart, I'm identifying a little bit of a trend line forming here. Something to keep an eye on. We might actually have a pennant. It's hard to see. Yeah, I know, we do. Without zooming in, it's hard to see, but we got 3 points of contact. We got this green candle, right? So we had a support right there, support right here, support right here, and support right here. So we actually do have a decent pennant here. This would probably be a good time for a short-term dip and then maybe bounce off of the EMAs again. This is another perfect example of my Ichima model. With my Ichima model, I have the 55 and the 99 EMAs, or some of my major components. You can tell how strong this 55 was. This entire sequence for days, right? That 55 EMA was a major support. Sometimes in a big bull run, I'll tell the guys, I'll just get in every time it dips down and touches the 55. I'll buy in, because then we get these nice big bounces. You can either sell or you can just accumulate more every time it hits the 55, and it keeps bouncing up off that 55 until eventually it fell. So as long as you move up your stop loss progressively, you're locking in more and more profit, right? So in this case, once you break into the cloud, one of my other aspects of my model is once you break into the cloud, there's almost like more or less an 88 to 92% chance that you're going to go to the other side of the cloud. Whether you're breaking down into it or up into it, you're almost always going to go and touch the other side of the cloud, if not break through it. In this case, the bottom of the cloud, one of my other key supports, was insane. That plus the 222 AMA created so much support that even with these big wicks dumping down, we immediately bought right back up to above those supports. And then we went right back up from there, back towards the top of the cloud, and now it looks like we're actually breaking out of the top of the cloud. So Ethereum is still looking really bullish. And again, looking at the stochastic oscillator, it's similar to what we're seeing with BTC. If you look at the 4 hour, it's a bit overbought, so we're going to be correcting soon. But you can see sometimes you get overbought, but you still end up going on big runs. So it's certainly possible that we can keep running. The key here is going to be BTC. If BTC can hold above that crucial level and keep the momentum up, that's the key. And for those who don't know, the stochastic oscillator that I so heavily rely on is a momentum oscillator. That identifies momentum. So when you're turning up, you're getting a bullish reversal in momentum and it's picking up speed. And then as you're starting to get that shift, you'll notice that's where you start to slow down a bit. And then it's a question of whether or not that momentum can continue, or if it does completely reverse, you're going to get a correction just like we did right here. We ran up with the Stoke. That was exactly, follow the dotted line down. Right here is exactly where the top of that Stoke was when we reversed and turned down, and that was the shift in momentum. Then we went down, we bottomed out, and ever since the reversal right here, right, we've been going back up ever since we started turning back up on the Stoke. So that entry was perfect on Ethereum as well. So that's going to be a risk-free trade when I move up my stop loss. Let me, I'm going to have to do this so I can tell the guys in the group that I've adjusted my SL anyway, so let me just do that now. So Ethereum is now a risk-free trade as well with my new stop loss right at my entry. Next, I have this position on BNB. Again, perfectly surgical entry last night. I couldn't have gotten a better entry. I'm up about 3.85%. Same thing. I'm going to make this a risk-free trade as well, purely because there's some uncertainty. I'm not 100% confident in the model staying bullish, But if it does turn down, I think it's going to correct enough that I'm going to get stopped out on these trades anyway, and I'd rather not take a loss. I'd rather get stopped out, break even. That way, if we do bounce and start going back up, I can always buy back in, right? Once I get stopped out, I'm getting all my money back. I'm breaking even. I'm not taking any loss. The trade is risk-free. So if I put 10 grand into a trade and I get 10 grand back, it's not a big deal that I got stopped out. I could buy right back in as soon as it starts to look bullish again, right? So this is also a risk-free trade with a new stop loss. My ETC trade is not up as much, but I got in at this major support zone down here. Last night in the live stream, we talked about this quite a bit, but for people who aren't as familiar with my systems, I keep the reason why my charts look like this when I zoom all the way out like that is because I will keep support and resistance on my chart for 2 years sometimes. So if we start pushing up, I'll probably get rid of a few of these because some of them are redundant. But the major, stronger supports, I will leave on my chart for 2 years. I don't care. Because 2 years down the road, we might end up bouncing right off of that support level, and that's what happened here. This support right here has been on my chart for months and months and months and months and months. And look how strong of a support it's been ever since the end of last month, right? Every time we get down there, except for the big dump where it wicked through, that support holds like a boss. So last night we were riding it, and I'm like, damn, that's perfect. I couldn't ask for a better entry. In addition to that support holding so well, when you look at the 4 hour, I did a fib retracement, and it was sitting right at the 618 fib retracement. And on top of that, the 222 EMA, which is one of my key Ichima dynamic supports, was just below that. So by entering right there where I did, I was able to place my stop loss only 1.75% below my entry. And I had three different strong supports to protect my stop loss. In that context, it's pretty unlikely that I'm going to get stopped out and lose on that trade, short of BTC taking a huge dump. As long as BTC is stable, this was an insanely perfect trade. I got in right on a strong horizontal support, right on a strong Fibonacci, 618 Fibonacci retracement, with a 222 EMA Ichima dynamic support that was protecting my stop loss. So if it did dip down slightly, there was a very high probability that it would stop me from getting stopped out because it would hold. The only time it failed was on these big dumps when the wicks poked down. So only if you had a big dump like that would I have actually worried about it failing. So this trade, I'm not moving up my stop loss. I'm leaving it open with 1.75% risk. It's pretty small risk. Obviously, I can afford the risk considering I'm up so much on my other trades. Now, these trades, I'm not up on all of them yet. BSV, I'm not up on. That's sitting right around my entry as well. Similar sort of configuration, although this one doesn't look as bullish. In this case, the 55 EMA was holding really well, and my stop loss is down below the top of the cloud with another horizontal support. The issue here is we got that completed reversal. Remember I was talking about how once the candle closes, if it's reversed and locked in, it usually stays that way. You'll notice with certain assets, that's not the case. So the only reason I still got into this trade, even though the Stoke was turning down, is you know how people say look left? I looked left. And looking left on the BSV chart, I can see with this particular coin, with BSV, you actually do sometimes get these zigzag reversals. So certain assets you do, certain assets you don't. In the case of this BSV trade, I wasn't totally worried about my stochastic oscillator strategy because with that particular, this particular BSV and dollar trade pairing, it's not as precise. It goes zigzaggy sometimes. It's not like the one that I showed you before with ETH or PTC where it's a nice clean wave up and down every time. In this case, once it crosses over, it's certainly not outside the realm of possibility for it to reverse again. What I did notice about BSV is my Ichima system works really well. So on this big dump, bounce off the 55. What did I tell you? If you were to buy when you're sitting right on the 55 EMA, it's a really great strategy because most of the time that's going to be the strongest bounce point when you're in the middle of a bull run. Every time you come down and touch that Ichima dynamic support, that's what you're going to want to do. Remember, my Ichima indicator, it's called Ichima Dynamics. It's available for free. You guys can use it on TradingView. It includes the cloud pre-configured with my settings, and it includes all 3 EMAs pre-configured with my settings, so you'll see these same lines, and I use the top and the bottom of the cloud, plus all 3 EMAs as support and resistance. And those support and resistances are key because the horizontal supports are great when you have them on the chart. But what if you were getting up to $500 on BSV and the price has never been that high before? What ends up happening is you don't have any horizontal supports. So you don't have the luxury of saying, oh, there's going to be a resistance when we get up here, or there's going to be a support when we get down here. So you need what's called dynamic supports. Dynamic supports change over time. They're not static. A horizontal support is always at 230. It's never going to change. A dynamic support moves along with the price action. So as the price trends up, the 55.99 and 222 EMAs move up along with the price in that same rough trend line, right? So as you come back down and ride along those supports, you have supports that you can use in areas where you don't have prior trading history to identify horizontal supports or identify Fibonacci retracements. Right? Everybody understand? So in this case, I'm going to leave this trade open as well. It's a little bit riskier than my other ones, but just like with XTZ, or with ETC rather, I'm leaving it open with my stop loss down in my original SL. In the case of, we already talked about XTZ, right? So that was up 13%. We already went over that one, and same thing. This one I expect to correct soon. So at this point, wait a minute, didn't I have... I must have accidentally deleted it. Where did I place my stop loss on that one? Because I did move up my stop on XTZ. Oh, wait, no, I didn't. Okay, in this case, my XTZ trade is still at my original entry. Okay, I have to figure out how I want to work this then. Man, that last XTZ trade was great. If I was still in from there, it would technically have been 21.6 total of 25% run. So I don't want to move my stop loss up too high, because then on a quick wick like that, I can get stopped out. Now this support's holding pretty well, but you'll notice on the 4 hour specifically, that Stoke model is telling me that we probably have a dip. It doesn't have to be a full-size dip. It can be a quick one and then a nice reversal back up, because we're really bullish. It's just a question of how much profit I want to lock in. Placing my stop loss at my entry is pretty much a sure thing, because the 55 EMA will be there for support. You can see on the last dump down, besides a quick wick, that 55 EMA held like a boss. So I can make this risk-free, or I could take the rest of my position, because I sold some for profit. Maybe I'll probably just lock in like 2.5%, so it's below this horizontal support at 320, which was a key resistance at that point back there, as well as over here. It wasn't as relevant in this area, but on the way down, it could potentially be a support. I may leave my stop loss right around there just to lock in 2.5 to 3%, so if it does dump, at least I'll walk away with some extra profits. I'll decide what to do and notify the guys in the group, and if anybody on Twitter wants to know, you can just ask me on Twitter if you're curious, and I'll let you guys know what I decided to do with my XTZ stop loss. As for the rest of my open trades that we did last night, some of them were from before that, so it wasn't last night, I believe it was... No, last night I got into this 2 nights ago. That failed. That trade dumped. But this RVN trade actually has been holding really well and looks good. That also needs to correct soon. It's currently up 3.5%. Stoke is pretty high. It looks like we might have to correct. Looking at the hourly is also going to correct. I'll probably... Yeah, on RVN, I'm going to have to move my stop up to my entry potentially. Well, there's a good chance it'll hold. So in this instance, I'm actually going to leave this trade as is. So I always tell people, don't copy my trades one for one. You don't want to have my same stop loss, because we're all unique. We have different risk tolerance, right? So in my personal circumstances, I can afford to take the risk on this trade. If it were to dump, I can afford to take a 2% loss, because I have such a big profit on my other trades. But other people in the group or people on Twitter, I wouldn't want you guys to use my stop loss and leave your stop loss there, because you might not be able to afford a 2% loss. So if you were in this trade with me, for instance, I would say I'm going to leave this trade as is and risk 2% and just hope that the 55 and the 99 EMAs do hold on the next correction. And as long as they hold on the next correction, I'll be in great shape. But if you can't afford to take that 2% loss, then as soon as you get up 2 or 3%, you can move your stop loss right up to your entry, and then it's risk-free. If you lose and it drops, you don't lose a penny. You could just get into the next trade. And if it does hold and it doesn't stop you out, then you're still in and you're still risk-free, and then you could lock in profits on the next move up. So it's a personal decision. I'm personally going to leave my trade as is, and I'm not going to move up my stop loss. But if other people out there are in this trade with me from last night, you guys are welcome to move the stop loss up to your entry if you personally don't want to leave it open to additional risk. Now, my latest quantum entry last night, this one I didn't personally get into. I shared it with the group, and I told everybody that this is the setup that I would like to get into. I just didn't want to open up any additional trades because I had a lot of my capital tied up, so I didn't buy in. But for people in the group who did, you're up almost 5%. This is a trade that certainly should at least be made risk-free. If not, you could potentially take profit, especially since, like a lot of the other alts, it looks like we're going to have that correction based on the 4-hour. Same thing with all the others. We haven't gotten a confirmed reversal where we start coming back down. So there's still a chance, as long as BTC holds, that we can run up on these alts. So that'll be up to you. Either take 5% profit, maybe sell half of it now for 5% profit, and the other half of your position, you can lock in, you could move your stop loss to your entry and make it a risk-free trade, you know? My IOTX trade is up, so it was 25%. In this case, I have 10% locked in. I'm still bullish on this overall. So I took a small profit for 18 or 20%, a portion of my position, but the rest of it I'm holding with 10% locked in. So if it were to dump, I would get out of the rest of the trade with just 10% profit. There's still a pretty good chance that we're going to hold and we're not going to correct that far. We haven't really gotten a full correction based on the 4-hour. It's been staying bullish. So there's a really good chance it could push right back up and continue given how bullish it's been. Even when other things were correcting, this thing was running up. NKN, I don't have this short-term trade open anymore. That was, I had moved my stop loss up and gotten stopped out while I had profits locked in. My last trade before that on NKN was a 30%er. This one was a 20%er. I think I had an earlier one. I might have taken it off of my chart. That was for even more profit. But NKN, I generally do pretty well on. I have I'm pretty locked in with reading this chart now. I don't have the open short-term trade anymore, but I'm still open from this long-term trade where I'm still up 28%. So it was up almost 40% at one point. Now it's finally correcting. This is another example where on the way up, every time the Stochastic would reverse, you would get a correction. It just happened to be a tiny, tiny correction because we were so overwhelmingly bullish. So now, same thing. We're getting a correction that's a little bigger than the other ones, but there's still a pretty good chance that it can continue up given how aggressively bullish it's been. The fact that the daily is starting to turn back down is certainly a bearish indication, but we only have an hour and 7 minutes left for this daily candle to end. If this daily candle ends where it is now, this hasn't fully crossed over bearish yet, so the momentum isn't necessarily taking a reversal, right? So I'll check back in after I give the kids a bath, and as long as we haven't tanked, I'll decide what to do with this. For now, I'm going to leave it as is since it's a longer term trade, and for the longer term stuff, I'm not as worried about locking in short term profits. After you get a strong parabolic run like that, at 35%, I'm still up, 33% now down here. It's probably worth it to sell a portion of it. I might want to sell half and take profit, and then the other half I can hold and just keep a risk-free trade, or maybe lock in 7 or 8%. In theory, I could probably place my stop loss up and lock in 10%, because then I would have the top of the cloud and all 3 of my key EMAs protecting my stop loss. So if it did have a correction here, there's a very, very, very low probability that all 3 of my Ichima dynamic supports would fail and I would get stopped out. So I'm probably going to lock in 10% profit on my long-term position here. Actually, I'm definitely going to do that. Let me put that to long. Okay, the last couple I wanted to show you. So that was FTM. That was a 30% breakout. Unfortunately, I don't have a lot of it left. What I usually do is I'll set 2 stop losses at varying levels. In this case, my first stop loss on, like, I had 80%, no, 75% of my FTM trade was a short-term trade where my stop loss was pretty much right here, about 3.5% below my entry, and I got stopped out by, like, look at that. That sucked. Look how close that wick was. I just barely got stopped out for a tiny loss, and then I got the breakout. But my model was perfect. I was tracking the horizontal support, each of my dynamics with the 55 and the 99 EMA giving me a confluence support zone right there. It was extremely bullish. We were also riding out of what was an ascending triangle right here. So all in all, it looked extremely bullish. Plus, there was a little bit of a trend line that we had to break through. And once we did, I knew we would bust out. The bright side is I still had at least 25% of this position left, and that was a longer term hold where I had a lower stop loss of 5%. So I'm up 33% still, or 32% on FTM. So I have a lot of 32% breakout trades going right now. And just to remind you what I had mentioned on Twitter, the reason why my strategy is so great is because I have like 4 or 5 or 6 maybe 30% breakout calls from the last 5 to 10 days. So even though I've gotten into probably like 7 or 8 trades that I got stopped out of for a loss, each of those trades I only lost somewhere between 0.5% and upwards of 3% roughly, depending on which trade. So if you were to add up all those losses, it's probably going to equate to like maybe a quarter of the profit that I made on just one of my 30% breakout calls. So then even if you erased the profits from just one of my 30% breakout calls, that means that I still have 3 or 4 more. That's all pure profit because I've already taken care of my losses for this entire period. So by managing risk and having a tight stop loss, I can ensure that when I do lose, I lose so small that it doesn't matter all that much unless you lose a lot. And when I do win, I win so big that even if I take a lot of those losses, my wins are so big that it just erases the losses instantly. I just showed you, right? So I have, there was Quantum was a big one. IOTX, 25%, and KN was 37% at the top. Cody, this is another long-term trade, surgical precision entry right there. We got in right at the bottom. It was perfect. It's up 35%. Well, technically it's up 32% now, but at the top it was 35%. On this trade, I have 12.75% profit locked in. So this 12.75% profit just on this one trade, that profit would cover all of my losses if every one of my other trades were to dump right now. They could all dump 50%, and it wouldn't matter because I have a very well-placed stop limit order. So no matter how much it goes down, I can't lose more than 0.5 or 1% or 1.5% depending on which trade and how it's set. So with this strategy, I'm mitigating my risk, I'm constantly controlling and analyzing my risk, and I'm making sure that no matter what happens, I can always erase any potential losses with just 1 or 2 good trades. And since a lot of my trades, when I do get them right, do get these big breakout runs because of the nature of my system with my Ichima dynamics, that's usually where you get these big breakouts is when you bounce. Look at this. Came down, bounced off the 99 EMA, launch. Came down, bounced off the 99 EMA, nice bounce, came back down again, bounced off the 222 EMA, my next Ichima dynamic support, launch. So every time you come down and you find strong support on one of my Ichima dynamics, if you were to enter every time that happens, I know it sounds ridiculous, but you'd pretty much never lose. It's unless you're in a really bad bear market where you just keep tanking. Um, it's insane. If you're managing your risk well, your losses do not matter, and your gains can be absolutely epic, assuming you have a strategy like mine, where you can regularly get those larger returns. So, is there anything left? We went over IOTX, NKN, and I showed you Cody as well, which I still think is a good mid to long-term trade, but I wouldn't jump in now because you'll notice at this point the Stoke is pretty overbought. It's gonna have to come down a bit. It might not take a huge dump, maybe not as big as this last one, which was 30% dump. Let me see what the weekly looks like, because the Stoke works really well on all time frames for the most part. We don't have enough data to use the weekly, so I'm not sure how big the correction will be, but it's definitely going to correct. So I think there's a good chance I will close this out entirely, or at least sell 60-70% of my position, take the 30%, 32% profit, and then I'll keep a little bit just in case it were to make another push up for a little bit extra profit. Okay, that's that for now. I'll do my full stream with the group, with the premium group tonight, as usual. But I'll take, like, since I have nobody in the group, this is for public people from Twitter. I only have like 2 minutes. Then I got to go help Jenny with the kids. So I will take a couple questions, not chart requests, but just questions about strategy and stuff like that, if you have any. And then the last thing to mention is, if you did come here from Twitter and if you're not in the group, joining the group would be an awesome way to support me. I'd really appreciate it. One of the best reasons to join the group is because I'm Jewish and I love money. And when your money becomes my money, then that makes me happy. So if you want to make me happy, make your money my money, and then you will achieve that goal, and everybody is happier for it. So that is a great solution. Also, I work with Chart Vampire and the Cryptomist, another two other really talented, great analysts on crypto Twitter, if you guys are familiar with them. They provide their analyses and share all their charts and everything. Every trade they do make, they share and explain what they're doing. So that's very helpful as well. And one of the key reasons why people do join the group, especially the premium group, is because we do these live streams. I do phone calls one-on-one with premium members. We do group live streams. I will do a one-on-one live stream too with premium members if they need help and it's something private where they wanted to discuss something that other people, it's not their business. So that level of interaction and direct communication isn't something that any of these crypto groups do. It's pretty exclusive to me and what I do. So if that's something you'd like to do, if you think that you'd like to learn how I trade, and if you would like me to teach you how to do what I do, there's nobody who teaches like I do. There's people who are probably better teachers than me, but I'm so hands-on, and I'm more than happy to teach you guys one-on-one on the phone call if need be. Get on the phone, chat, talk about strategy and technique, portfolio allocation, whatever you guys need. I live for this stuff. So if you want to support me and join the group, that would be amazing. I would love that. And for anybody out there who thinks like, oh, if you're so good at trading, then why do you need to have a group that you charge for? This is a pretty easy explanation. This live stream has been running for 45 minutes. If I was day trading and scalping in 45 minutes, I could probably make $5,000. So by not spending the time trading and not spending the time researching and not spending the time analyzing potential assets that I may or may not want to invest in, I'm losing out on the money I could be making. So I could either trade full-time for a living, or I can subsidize that time by doing the paid group, and then I can still trade, but I don't have to focus entirely on trading. It opens me up to spend time doing educational work and helping other traders become better traders. Because for those who don't know my story, I got wrecked with everybody. I'm no expert. I'm no classically trained technical analyst from Wall Street. I got wrecked when everybody else did at the beginning of 2018, and I had to crawl my ass out of my grave. I lost almost $100,000, and I had to make it all back within a few months. And I managed to do that by studying 12, 16 hours a day sometimes, nonstop for a month straight, until I was able to not only learn how to conduct different technical analysis methodologies, but I also learned how to trade, manage risk, use different types of trading and risk management strategies. I learned how to identify my own systems and my own patterns that would help me identify potential big breakouts, like my Ichima model. So I was completely self-taught, and I always said I wish there was somebody who could have just held my hand and taught me all that, so I didn't have to lose $100,000. So if I had somebody like me, I could be as good of a trader as I am today, and I wouldn't have had to lose $100,000 and 3 months of my life to get there. And that's why I like to give that back to the community. But in order to do that, I can't spend all my time trading and focusing on making a living. That's why paid groups are important in my case. So when people say that stuff on Twitter, paid group leaders suck at trading, otherwise they wouldn't charge your group. They're idiots. They have no idea how much work it takes for me to do what I do. All right, so 2 minutes. Any questions? Let's see. Is there anything in the chat? No, bath time waits for me, bro. But I gotta go. It's 7 o'clock. I gotta go get them upstairs. For those who don't know, my wife's 8 months and change pregnant, and we have 20-month-old twins. So we're about to have a newborn with twins under 2. It's going to be insane. But obviously she shouldn't be lifting the babies constantly. So I can't just send her up to give them a bath. I have to help out as much as I can, and she needs me. So, all right. So was there? Yeah, you can tip me if you want, but why? I mean, I know it's counterintuitive. I joke about, oh, I just want everybody's money. I'm obviously joking about that. You could tell, hopefully, by my demeanor and energy that I love doing this. If you were going to throw me a tip because the information I shared with you was in some way helpful to you, I would much rather you join the group with that same money. Instead of giving me $100, join the group. Instead of, well, the premium group's $130 a month. Unless you do multiple months, then it's cheaper. The basic group doesn't include these live streams. But if you were going to send me a tip, I'd much rather you just join the group, because then you can work with me and we can work together. We can hang out and chat and share trading ideas. There's so much value there. I'd much rather people get something for the money instead of just giving me their money. Been using your indicator for some time. I just joined the group. Question: put more weight on the EMAs of the cloud for support. It's not one or the other. So when I say, like, and this isn't even just the Ichima model, this is with anything. Any different strategy, technique, indicator, any support or resistance that you use, every chart's different. So if I'm looking at this Cody chart and I'm like, man, every time it hits the 55 EMA, the 99 EMA, or the 222 EMA, at least one of those three is where it holds, right? Perfect, right? 99 EMA, boom. 99 EMA, boom. 99 EMA, boom. Major support. 99 finally fails, then the 222 saves the day. And then on the way up, we have support again from the 99 and then the 55. Now, if I was looking at ABC coin, and on that particular coin, it seems like the 55 and the 99 never hold as support. The 222 does, but the 55 and the 99 don't over the last, 2 months. Well, then I'm not going to use the 55 and the 99 as part of my analysis now. So if you're looking at a chart and you go back over the past 3 or 4 months and you notice, like, most of the time, the 55 and the 99 EMAs hold as really strong support. But for the last 2 weeks, it hasn't. I'm not going to trust that they're going to go back to holding, right? I'm going to want to wait until I'm seeing some consistency. So that's why I said earlier, where I was looking at, like, BTC, the stochastic model has been perfect. These are nice, clean up and down waves. Each of my dynamic indicators have been perfect with supports right here from the 55 EMA. So since over the last several days, my indicators have been just flawless. I had a very, very high level of confidence on this trade here that it was going to play out exactly how I expected, because my model had been so accurate over the prior few weeks. So if you're looking at a chart and you notice that the EMAs over the last 3 or 4 days, the last 2 or 3 weeks, depending on what time frame, if you're looking at the 4-hour, the daily, the weekly, but if you're looking at the last 20 or 30 candles and you're noticing that the top of the cloud happens to be the best support and it's way stronger as a support than the 55 or the 99 EMA, then the cloud is going to be your ideal support instead of the 55 and the 99. So it's not like I say one of them is better. They're all there and they all have the potential to be the best support on the chart. It just depends how that particular asset has performed with my model over the prior, whatever, a couple days or whatever time frame you're looking at. Hopefully that answered Tyson. What is the RSI telling me? I don't know what you're talking about that in reference to. At this point, RSI is not really telling me anything. Earlier, there was some concern over some bearish divergence, but the last time we had some bearish divergence, at this point, we ended up just breaking straight up. So we're so overwhelmingly bullish now that a lot of those indicators that you would normally think are bearish are just invalidated. It used to be I would see strong bearish divergence, and I would say there's a really good chance we would dump. I noticed it here, and I didn't even suggest that we may dump because I was so overwhelmingly bullish for all the other reasons. When you're in a bull run or a bearish run, you have to readjust your expectations. When you see something that's normally a bullish signal for you or something that's normally a bearish signal for you, it may do the complete opposite. So I'm constantly reevaluating and adjusting what I'm looking at. All right, any other questions? 100K in 3 months is crazy. Yeah, that was a lot of leverage trading, high leverage trading. That's why I stopped. I stopped margin and leverage trading for like a year and a half, 2 years. I just started again. pretty recently. I started doing scalping sessions with 100x with guys in the group recently. I've been doing margin trading for like 10, 25x on the majors lately. But for almost 2 full years, I stopped leverage and margin trading because I pretty much was addicted to it. I made back all my losses, and then I escaped by the skin of my teeth. And I was like, you know what? At this point, it's just so much risk. I could lose it all back in a day. So I'm just going to step back and spot trade. And I was building my capital up, and then I had enough capital where spot trading gave me enough to just pay the bills. So now I try not to do too much leverage trading. But yeah, in order to make that much over a 3 month period, I pretty much did nothing but high leverage for a few months. What if you only have $500? Is my total money? Is trading possible, or do I need a stable income? You're not going to be able to trade with $500 and make money to pay a mortgage every month, obviously. But it doesn't matter. You could have $1. You could have 50 cents. It's irrelevant. You're here to build upon that, right? So you can invest it and watch it grow slowly over time, or you could trade. You could use leverage. Of course, if you use leverage and you don't have the skills to properly manage your risk, you're going to lose that 500 and anything else you put in the market. So you're going to want to be careful, obviously. But it doesn't matter how much you have, especially if you're compounding your gains. If you've ever looked at how much money you would actually make if you compounded 1% profit every day, it's astronomical. If you start with $1,000, and I don't even remember what it was. Here, let me do it. I think there's a quick calculator to do it. Let's see. Compounding profits calculator. Just to show you how insane this is, because a lot of people don't realize, even with small profits. Do I have it saved? No. I think I'm just going to Google it. Hold on. Here we go. Starting balance. So say you started with $500, and every month you're making 1% profit, and over a 12-month period, well, would that work? No, I need to do, yeah, that wouldn't work. I have to do it daily. Let's do, I thought I had it saved as one of my, what do you call it? Bookmarks. I can't find it in my bookmarks. There we go. Compound interest calculator. This should work. So starting amount. Let's start with $500. This is for interest, but it's the same thing. So in 1 year, let's say every day you're making 1%, no additional contributions. Wait, this said that you could, this website said you could do it by daily. That's so annoying. Oh, compounded daily. There we go. The contributions are what is bi-weekly. Oh, see, this isn't working right. Fuck it. You guys get the point. I can't find a good one. I don't know. Let me try one more time. Alright, this one's made for trading, so let's see. Compounding gains. Alright, so starting balance, $500. Monthly contribution, 0. This is also monthly, huh? I have an idea. Let's do this. Assuming it was 365 months, right? But days, we're just going to consider it to be... Can we do it that way? No. All right, I give up. You guys get the point. If you compound it every day, you're going to make a lot more money. If you start with $500 today and you make a 1% profit, and you have $500.50 the next day, then you're going to make a 1% profit off of that. So that incrementally goes up so that your starting balance that you're trading with is higher every time. So even if you're only making 1% every day, you can end up making far more money than you could have possibly imagined. If you were to do, I forgot what it was. I had a spreadsheet where I did it. Let me see if I might actually have that open somewhere. If it was 500 equals that times 1. Here we go. Start with $500. Make 1% profit. And then you would have $5 would be 1% profit. So then equals 500 plus that profit, 505. Be all right, this should work. Here we go. All right. Okay, so this would be six months. So if you were to start with $1,000 in 1 month, you would make $320 if you were making just 1% a day on average. So . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . Just be like that. So initially, right? So you have $1,000. You make 1%. $1,000. You make 1%. That's $10. Then you have $1,010. You make 1%. It's $10. Then you keep compounding that. So eventually you have $1,200. So then your 10% profit for that day, or your 1% profit rather for that day, is going to be $12 instead of 10. So your profit every day goes up, even though you're making the same 1% per day. You're making 1% every day, but your daily income just went from $10 to $13 after just 1 month. So if you're compounding, you're starting with a relatively small sum of money, you could turn that into a substantial sum inside of, with leverage, obviously, inside of probably like 6 months, just from using 10x leverage here and there. Nothing even too crazy. You don't have to go absolutely nuts. So I wouldn't say that you can't trade, but you're not going to be able to trade and make enough money to pay bills on a daily basis. You can't trade for a living with such little capital. You need to have more capital. Sorry I wasted so much time to look that up. It was annoying me that I couldn't find a calculator to quickly figure it out. So I had to do a spreadsheet. All right, any other questions? One more question? No, I can't look at any other charts because I got to run up to do the tubby time. This bull run can stop. All right, I can go over that. And I don't always use 10x leverage. Sometimes I do. Sometimes I just spot trade. But a fair amount of the time I'll use 10 to 25x on majors like BTC. In addition to my position size. So if I were to have like 10 grand in a trade, it's not $1,000 with 10x leverage. I have 10 grand in the trade, so it's essentially a $100,000 trade because it's 10x. So I have 100 grand worth of BTC. I only put 10 grand into it. No, it's fine. I was just annoying that you didn't make me do anything. I was just pissing me off because I was trying to show you an example and I couldn't find a calculator that works. I definitely have one saved somewhere in my bookmarks. I gotta find it. I have so many bookmarks. All that gay porn just fills up all the folders. I mean, all the financial websites just fill up all the folders. Well, there was one more question. Where was it? Oh yeah, so this bull run. Now, for those, I did mention this in an earlier stream. For my longer term analysis, I used the same techniques, same strategies. So what I did was I looked out at the weekly, and the way I was able to predict this bull run with some pretty insane precision, I don't know if you guys all follow me religiously on Twitter, but I was very explicit about this. I got in down here at the bottom of that weekly candle, 0.4%. My stop loss was 0.4% below my entry. So I essentially got in at the bottommost point before the breakout. And I told everybody on Twitter we are going to break out for multiple weeks. And this is why, because of my stochastic model. It is fucking fire. It is insane how much money I've made from such a simple indicator. When it's zigzaggy like this, it's not particularly reliable. I keep saying that. It's not always a guaranteed sure thing. But when it is nice and clean like this, where you have these perfect, clean, repetitive waves, and you have a repetitive, predictable cycle, there's nothing better or easier to indicate strong moves than using my stochastic trick. This run up, this entire run up, perfectly aligned for a 60% run on Bitcoin. Flawlessly aligned with the Stoch oscillator. This dump was exactly at the top when it started turning down. And it dumped right here to the bottom. 64% dump. Perfectly lines up. Bottom to the top. So the top of the Stoch maxed out here, right? So the top of that candle is 100. 1 second, Jenny, I'm almost done. 155% run. Perfectly aligned with my Stoch model. Then it wasn't as clean, it wasn't as precise. This correction down was a sideways correction, and it took us a long time to come down on the Stoch. So when you see that in the future, what that should tell you when you're getting an extended sideways correction like that, what this generally means is, oh shit, that's annoying. Hold on. So you can see there's a bull flag, right? That pennant, not a flag, but a pennant. You see that? It's not clean because I'm using just this tool. So not only was that pennant a bullish indicator, that bull pennant, but the fact that we had a sideways correction that was consolidating within an apex like that, high probability of breakout, coupled with the fact that we had stable volume stabilizing after it was declining, the volume stabilized, and the reversal on the stochastic oscillator on the weekly. When you get this sideways correction and not one of these big dumps, like look, this correction was a big dump down. This correction over here, big dump, big dump, big dump. This correction, big dump. When you have a correction like this that just moves sideways, that's extremely bullish because you should expect a correction to be a relatively hard fall, right? It doesn't have to go that far down. It could be a much smaller correction, but you would expect it to just go down. When it just moves sideways like that, that means there's a ton of buy pressure that's propping that price up. So even though it's attempting to correct, even though it is actively coming down, there's so much pressure just propping it up and pushing it up. What that tells you is once the sell pressure is gone, once the correction is complete, once all of that selling stops, then all of that buy pressure that was holding the price up is going to force the price up because now there's nobody selling to stop the price from going up. Does that make sense? Everybody understand what I mean? When you're moving sideways like that, that's why a doji, this is the doji. You know what a doji is? That candle where you have a line in the middle and then the wicks going up and down with a small thin body in the middle. What that means is the middle is where you open and close, and the top and the bottom of the wicks is the highest and the lowest point. So the high of this candle was up here, the low of this candle was down here. The candle opened at the bottom of this bar in the middle, and it closed almost at the exact same price at the top of that tiny bar in the middle. So what that means when you get those dojis, the reason why it's usually a reversal indicator, well, that's why it's such a strong reversal candlestick, is because there's a lot of sell pressure pushing the price down. So you'll spike up really quick and then it gets shot right back down. It'll spike all the way down and there's a lot of buy pressure. It'll get bought right back up. So you have all this buying and all this selling and they're competing. The buyers are pushing up the price. The sellers are pushing down the price. It spikes up. The sellers push it back down to the middle or lower. Then it goes down and the buyers push the price up either further or right to the middle. And you end up with a doji. What that means is on the next candle very often, either the buyers or the sellers disappear. Once they stop constantly selling and dumping, then those same buyers that are buying will no longer have the effect of just holding it there. They'll now have the effect of causing a pump and pushing it up higher. And if the sellers stay and the buyers disappear, the buyers are no longer there to keep the price up. So instead of those sellers dumping and dumping and dumping to keep the price down against the buyers disappear. So now when they sell, the price actually dumps down. That's why a doji is such a great predictor as far as candlesticks go of a trend reversal. And it's something very similar when you're getting a sideways correction like this, especially when a lot of the candles within that sideways correction are themselves dojis, right? You can see each of these candles have that same effect where there's a lot of action above and below. And in in 5 or 6 instances, all these candles in a row, those buyers and sellers are pushing that price back to the middle and they're competing. So once one of those groups disappear, the price is going to shoot up or shoot down. And in this case, I knew it was going to shoot up. Very, very precise analysis on my part here. I'm especially proud of it. A lot of people made a lot of money in the group because of this analysis. So this weekly analysis was great. Now we're getting pretty high. There's probably this weekly candle only has 16 hours left. But after this weekly candle closes with a nice strong green weekly candle, there's a very good chance we're going to get another green candle. So I think we're going to have another full green week. We're going to have ups and downs short term within that week, but that overall week, start to finish, should end up being a green week. And then after that green week, we're probably going to have a really big correction. And that's because if you look at the monthly really wants to come down. I mean, we're pretty overbought there. It doesn't have to, especially with a bull run. With Dave Portnoy, with El Prez, talking about getting into Bitcoin. If all the stoolies that he brought onto Robinhood and got into stocks, I love Prez. I just don't want him in Yeah, 'cause I live in Boston. I don't want him in crypto because there's too many pump and dumpers, and it's gonna fuck with the market. It's gonna be scared money, retail money coming in at first, but then there's gonna be a lot of people taking advantage of them, manipulating the market. But he himself will bring in a ton of people, so that is actually an event you guys should keep in mind. There will be millions of people that will come into this market purely because of him. He's a marketing savant, and he's been talking about getting into Bitcoin. So that's something to keep in mind. I would also focus on Link as probably the biggest performer in that. Bitcoin and Link will be getting a ton of attention from him. That's for damn sure. Um, I know a guy who knows him from Milton. Maybe I could ask him to talk to him and say, before you talk about any cryptos, let Jesse know what you're going to get into so he can enter it first, but we'll see. So yeah, Link has been an absolute terror. Last night, I told the group, we did a review in the live stream, and I said, at this point, I don't want to get in. I have a big long-term bag of Link. I keep telling everybody I constantly add to it. So my long-term bag is doing really well. Short-term trading-wise, we're really overbought, so I told everybody I have to wait for a correction. I expected to get this exact correction we're getting now last night because we were already really overbought. Turns out we got this big, huge pump first. So now the correction might only come back down to the bottom of that pump and may not even get in. I might not be able to get in lower because last night we were right around here at 10:20 or so. So I missed out on the entry because I said there's nowhere to buy it because I don't get into a trade unless I can place a stop loss below a strong support to protect myself from getting stopped out. So I didn't get into a short term trade on Link. But I have a very nice long term bag, and I'm always happy to add more. I will, if we do correct here, especially since the 4 hour is now turned south. If we manage to correct and get back down to 1050 or so, maybe I'll get lucky and we'll get lower. Since the daily is also really overbought, there's a pretty good chance we might even get back down to 9,850. I can certainly see that happening. There's a support resistance right there. That could be an ideal target to jump in. Might be able to jump in right around 880, so just under $9 is certainly possible since we have a 4 hour correction and the daily model both telling me that it's going to correct. There's a good chance we could get one of those lower entries. So I'm not jumping in yet, and I would advise against FOMOing in now because there's probably like a 90% chance it is going to correct. All right, that's it. No more questions, right, in the chat? I don't think. Pretty sure that was it. Oh, yeah, where do you see this bull run going to? So that's what I was saying, just to finish. Based on the monthly, it's really hard to say. We could get another full green monthly candle. So I'm not necessarily saying we're going to get a huge dump right now. The thing is, when I say, hey, guys, we're about to bounce. We're going to bounce in the next 30 minutes. And I call it with that insane precision, whether it's in the group or on Twitter. You guys see me do that all the time. When I do that, it's because I'm looking at a 15 or a 5 minute chart, and I can tell with precision it's going to happen within the next 2 or 3 candles. So if I'm talking about an hourly chart, I can say within the next hour, we're going to bounce right here or get rejected right there. If I'm looking at a daily chart and I say we're about to correct, well, that means that it could be 2 days away because every single candle on the daily chart is 2 days. So looking at the weekly chart, I'm telling you that we have 1 to 2 weeks left of bullish action before we reverse and go back down. But since you have to give yourself like 1 or 2 candles on each side of your prediction, if I'm talking about a 5 minute chart or a 15 minute chart or an hourly chart, and I say, hey, we're about to bounce, I'm talking about right now plus or minus an hour or two. So if you say plus or minus an hour or two after I tell you that it looks like within the next 1 to 2 months we're going to get a big correction, that could mean that it's going to be next week, or it could mean it's going to be 4 months from now. Because when I give myself a 1 or 2 candle range on each side of my prediction, the monthly candles, or every candle is a month. So it's really hard to say and predict with precision timing wise when things like that are going to happen. But there is going to be a massive correction, but we have to go up a lot more before that happens because we still have at least another week of bullish action before we get a correction. Then the weekly based correction after the next 1 to 2 green weeks, that correction is going to last 3 or 4 weeks. After that 3 or 4 week long correction, we're going to get another big run up, or we're going to get the big monthly dump, one or the other. So once that starts, I'll know for sure, and I'll tell you guys. Once you start seeing the weekly chart Stoke, and if you do use the Stoke oscillator, I don't use Stoke RSI. I use regular stochastic, not stochastic RSI, and my settings are 533. So if you're using those same settings and that same indicator, and you're looking at BTC, take a look at the weekly, and when you see that weekly, which is going to happen in the next 1 to 2 weeks, when you see that weekly turn down, it's not even all the way up above 80 yet, so it's going to be 2 weeks probably. In 2 weeks, maybe 3 potentially, when you start to see that turn down, that's probably the beginning of a month, probably a 25 to 35 day correction. But immediately short term, we already talked about this plenty. You can watch the stream back. I'll put it up for playback. We need to get up above that, stay up above 11,750 or so. Like right now, we're riding the 55 EMA, so it's making me a little bit nervous. The hourly is bearish. I just need this 4 hour to hold. We're right there. Like we're above 11.7, but we're right on the cusp of potentially coming back down. So I gotta go. I'm gonna go take the kids up, give them a bath. I gotta let everybody in the group chat on Discord know that I moved my stop losses up on most of my trades, so those are risk free now. Whoa! Who gave this stream a thumbs down? Not fucking cool. That's fucked up. Everybody has to like us. If you haven't given me a thumbs up, I am personally going to show up to your house butt naked. And trust me, that's the most terrifying thing imaginable. Yeah, very funny. Undo it now, or I ban everybody for life. Seriously, who the fuck didn't give me a thumbs down? That's so fucking rude. I know you guys are joking now by undoing the thumbs up and doing the thumbs down, but who the fuck does that? Someone spends their time to give you free advice. They spend an hour of their time when their kids are having dinner and they're missing time with their kids and their wife so that they can spend time with you and to help you learn something. You're not paying me. I'm not benefiting in any way. I'm just helping people and giving them insight on how I got to where I am and what I do. And they're going to negatively review my work. It doesn't hurt me. It's not like I get paid based on YouTube. I don't make any money off of it. It doesn't really hurt me. It's just, it's a symbol of disrespect. And that's why I've been talking about politics on Twitter, but I haven't been doing that much crypto stuff on Twitter. I do all my crypto stuff in the group, and on Twitter, crypto Twitter is filled with fucking douchebags. So I'm not inclined to spend a lot of time there helping people for free when there's so many cocksuckers on that platform. Anyway, thanks guys. I appreciate you stopping by. I'll do another public stream at some point soon. But again, if you want to join the group, I would appreciate it. It's a great way to support me, and the bigger the community, the better, because we have mods and other people in the group who are just regular paying members who are really great traders who share ideas with other people. Like my big Cody trade, just so you know, that wasn't even my idea. Once he pointed it out to me, I was like, all right, that looks perfect. I'm getting in. But one of the guys in the group told me to check it out. He goes, oh, look, that looks like one of your perfect trades. The 4 hours right at the bottom of the cloud. The 99 EMA was holding really strong the whole time. So I was like, all right, I checked it out. And sure enough, he was right. That is exactly the type of trade I look for. So he pointed it out to me. Without him, I wouldn't have even found this trade. I only got into this trade because one of the guys in the group, one of my students, told me about this trade. So the more people in the community, the better. The premium group, there's still like, there's got to be over 10 spots left because I wasn't really that active for a month and the group really slowed down. So there's plenty of spots left if you guys want to sign up. If it gets to the point where it fills up and you get a message, because you have to, if you go to the Discord group, you'll see in the welcome page, it explains it. We have a bot. So you go to the bot channel and you just do ! join, and then you automatically get a DM from the BitRoller bot, and it says, which would you like, premium or basic, how many months, send this much BTC to this address. So the whole thing is automated, but when you use that bot, if you do get a notification that says you've selected 3 months of premium, the group is full, there's a wait list, would you like to add your name to the wait list? For regular people, I would say go fuck off. But if you're watching the stream and you gave me a thumbs up and you showed me that respect, then if you do get that wait list, just send me a DM and I'll override it and give you a spot. Oh, great, now I have 3 thumbs downs. I hate you fucking people. Go fuck yourselves. Kidding. All right, talk to you later.